Hello everyone, good morning from this side. Okay, it's afternoon. I hope you guys are doing well. So I want to do a breakdown analysis on the post I did on my Facebook page concerning Euro USD. So if you are not following my page on Facebook, you can just look for Domitrons and you follow me. This is my new account. I don't have access to the previous one because I was having a setting on Meta and I don't know how I logged myself out of my page. So this is a new page. You can also have access through it from my YouTube and every other social media I have. They are all linked together. So I made a post on Euro USD and this is the post on Euro USD that I did yesterday. I analyzed this yesterday, being Tuesday, and today being Wednesday. This is how it happened because I was expecting it to return back to the favorite gap that we have here and then sell off to this low that we have here. So let's go back to the chart and I'll analyze that for you so that you have a clear understanding. So this is Euro USD on the 30 minutes time frame, but we'll be going on the daily time frame, right? So now I want us to take a close. First of all, I'm deleting everything. Um, right. Okay, not everything. Just delete this here. All right. So this is the daily time frame, and I want us to pay attention to what is happening on this daily time frame, right? So ignoring the fact that I are already seen a price traded lower down to an area of sell stop where we are currently purging that sell stop. We're playing around that sell stop. And also we did attack this low from July 2025. We attacked the market trade into it, took that liquidity, and we are ranging around here. So we can first of all notice that, all right, we are focusing on what is going to happen this week, right? So we see that market has been ranging, and that ranging has been like that since last week. So we will also go to our weekly time frame. You can actually see that. So I want us to pay attention that what is happening here is similar to a distribution phase occurring, and I'm still anticipating for price to still be drawn to this liquidity we have below here, this setup we have here. So I will also pay attention for retracement to this order block, but that will be any week price decides to come to that area. So yeah, so what we're gonna do is we will be marking our previous week high and low. So we have that here, and we have another one here. So I'll just delete this red line. Yeah, remove. Okay, so we have marked our previous week highs and lows because you can actually see the candles are ranging. These are parallel to each other, so you can tell that it is a ranging candle down to the daily time frame and then down to the 4 hour time frame. So this is where we are on our 4 hour time frame, and this is our previous week high, which was formed on Thursday, and previous week low was on Wednesday, right? Okay, so this week opened here. This is Sunday. This is opening price, or let's just take from the inefficiency that we have here also. So this is where price opened and we saw it trade to that previous week. And then we trade higher, trade out of the inefficiency. We created a high, did not go for previous week high. That was a Monday. Then we traded lower, right? So like I always do teach those who enroll for my mentorship and also talk about it on YouTube. I always say that if we want to start the week, we don't trade on Monday because Monday gives us a directional bias. If it wants to go bullish or if it wants to go bearish, right? Our trading focus should be from Tuesday and Wednesday. That is where we get to find our entry Tuesday and Wednesday. So this is what Monday did. We have this high and we have this low, right? So now we now we get to focus on what Tuesday is gonna do, which is the next day, right? So we can now go down to the 1 hour time frame. So now Tuesday opened. I also do use London New York session right here. So this is the Asian session. This is already Monday low. This is Monday's high, right? There was nothing like a structural break or a structural shift. It's just a swing high and a swing low. So this is a dealing range. All right, well, it means that we're gonna deal with this range once the next day opened. Now the next day opened, the blue color you see is London and the pink one is New York. So London opened, we trade higher and then we trade low, trading into this order block that we have here when London opened. And then New York opened, we saw that massive impulse upwards, trading to previous day's high, and also was drawn to our previous week high. So now looking at this, I want you to pay attention to what happened right here and for you to identify what a fake out is all about, right? A manipulation or a fake out. This did not break structure. It did not break previous this high. Neither did it break previous week high. What happened right here is a hunt. We hunted previous week high and we were purging previous this high. You can actually see how the candles were arranging on that high. This does not signify a structural break. And also, it does not signify a bullish structure or a shift of trend or shift of structure. We can still see and tell that all of it is inside a ranging market. But we're focusing on this week, which also is in a range and not bullish, nor is it bearish. It is in a range. So now they have seen that Tuesday did a sweep of previous day's high, then that tells me I will not be looking bullish or a bullish entry, right? Because there was no bearish structure that was violated to shift to a bullish structure. What we did was a drawn to liquidity of a daily range, which is this previous this high, this is previous this low. So once we trade into that previous this high, we came back into the inefficiency that was left behind, right? This is area of CB, sell side inefficiency, so buy side inefficiency. We trade into it, but then it was showing a weakness to go higher because of what? The market is ready to close. And that is now when I look for what the next day is going to be, which is to sell and looking for what we it be selling from. And that is when I saw this fair value gap right here. The price should trade into that on Wednesday, being today, and then trade lower to be drawn to the range low because we can actually tell that we are inside this range. All right. So also not forgetting our opening price right here. So now the first thing first is to know that market should trade back into opening price, right? Trade back into opening price, trade below the opening price, and give us a closing of the week. All right, so I might be anticipating that Tuesday could be the high of the week. All right, but then it's likely to close as a ranging market or a bearish market because I'm still expecting it to be drawn to this previous to this Monday's low as a take profit. So yeah, so when New York opens, we will know what will happen on New York, right? Why we're also paying attention to the inefficiency that we still have here. So yeah, so Asian session trade into the inefficiency. London open right here. We trade lower, trade below. We already did a hunt of Asian high. We trade into Asian low. So we see what will happen on New York because New York is where we are having our most focus on than London. Now the reason is because we are trading the dollar, right? So we are now focusing on the region in which the dollar is, which is New York. So we'll be trading New York instead of London because also New York has an overlap session with London. They are both overlapping, and when we have that overlapping, that is where we always get to see a volatility, just like you actually see on Tuesday when New York opened. It was also overlapped with London, and we saw that massive impulse higher to be drawn to previous week high and also previous day's high, still on a range. So I could look at this, notice that it is on a range, and decide not to trade it because I can see it is a ranging market. Okay, so trade like this could be like a risky trade, right? But it's still not too risky because it is a lower time frame entry and the entry point is minimum, right? So yeah, but should not be expecting this to possibly trade lower to anywhere you wanted to go because this is a range market and not a structured market. So we can just only be targeting the ranges, the external highs and lows as a take profit. All right, just like we see it go for this high, the investment needs to go for this low. So because once it sweep this low, it could possibly be traced backwards to form another area of resistance, right? Another range high. And we see how it's gonna go to next month, or we get to see what next week will present for us once the market opens. So that is what I saw. That is it for EURUSD. Take care. I'll be going now. So if you're not subscribed to our YouTube channel, go and subscribe to it. Search for Domitrons or Domitrons FX Trader. You'll see my channel on YouTube. If you don't follow me on Facebook, go to Facebook and search for Domitrons, or you can still click from my YouTube. You see my links there. You click on it, then you follow me on Facebook. All right, take care and be safe.